Hey, welcome back to YT Finance, and today we are talking about Alibaba stock, ticker symbol BABA. We will discuss why Baba stock is such a good buying opportunity right now and how much upside is left. I will also address various Alibaba stock price targets and Baba stock price predictions from analysts. Then we will perform some stock analysis ourselves, which will show you why I think Baba is well overdue for a recovery. Remember to like this video right now for more stock news, comment down below your Alibaba stock price predictions, turn on subscription notifications if you are new, and now let's make you some free money with Webull. Webull is a free brokerage app where you can buy and sell stocks, options, and cryptocurrencies, but right now you can get 2 free stocks with Webull. You can get the first free stock, which can be worth anywhere from $2 to $250 for just creating an account, and you can get a second free stock, which can be worth up to $1,600 if you invest $100 or more on your first deposit. You will have a 1 in 100 chance of getting stocks like Facebook, Starbucks, or Snapchat, and you have a 1 in 50 chance of getting stocks like Google or Procter & Gamble. To get this offer, just press on the link in my description box down below, but do it quickly because this offer will not last forever. And without further ado, let's get into today's stories. Recently, we have seen a great economic recovery in the United States thanks to the Federal Reserve's easy money policies, as well as we've seen a good recovery in China, but both countries will still need to have to recover over the long run in their respective economies. In both countries, however, the e-commerce companies benefited greatly because many of their customers were stuck at home, so they had to do their shopping online. This caused many of those companies' revenues to skyrocket, and today we are talking about one of the world's largest online retailers named Alibaba, who saw a huge increase in customers as well as merchants this past year and a half. For reasons we will discuss later in this video, Baba's stock price has been falling, but many investors are still extremely bullish on the stock, including an analyst from Oppenheimer who says that Baba is leveraging its advantages in supply chain and capital to penetrate lower tier markets. Even though the stock price is currently falling, investors have nothing to worry about, and because of this, the analyst has maintained his high-end buy rating for Baba stock with a price target of $310, which means that over the next 12 months, Baba stock can receive a huge boost from where the stock currently trades at, which is around $215. The analyst defends his stock price prediction by saying that Alibaba has very loyal customers to its brand and that it's growing at a very healthy pace. The company also has had a good amount of catalysts lately thanks to its multi-week shopping festival, which lasted from May all the way until June, which encouraged over 100% more merchants to join this year than the previous year, where millions of products were launched. A fun fact is that the stock is actually trading at its lowest point since its IPO, not in price, but in regards to its shares trading at a 20 times earnings multiple. TipRanks rates Baba stock as a strong buy right now, which is based off of 22 analysts saying that the stock is a clear buy, while in comparison, none of them say to sell the stock and only 2 say to hold it. The low-end price prediction is $192, which would be an absolute steal of a price for this e-commerce behemoth, while the average price target is $290.82, which would imply an upside of over 35%. And lastly, the bullish price prediction for Baba stock is $350, which would mean over a 60% gain for its more bullish investors. Another huge catalyst is that Alibaba and Tencent have stated that they will open their ecosystems to each other, which has made quite the chatter in various stock forums. From the graph on screen, you can see that the stock has a negative trading pattern, which has broken below its support line, which means that it has become the new resistance level. However, the stock has reached the point of becoming a perfectly good buying opportunity for investors to get in on, especially at these cheap prices. I personally plan to buy more of this stock because the lower that the price goes, the more irresistible the stock becomes. I honestly hope it continues to trend downward so I can continue to average down my average cost, thus making my position less risky. The bullish outlook for the stock is that it will regain its support levels, and it looks like a reversal can happen soon. Currently, the stock is trading below the 50-day and 200-day moving averages, which is a bearish signal. But because the stock is heading to a stronger support level below, I anticipate that the stock will bounce upward once it hits that support. Bears want to keep the BABA stock below $220, and bulls will continue to fight to bring the stock back above that price point. But to me, even if the stock goes all the way down to, let's say, $180, I will double down on my initial investment. The reason why BABA stock started to fall in the first place was because they are suffering from political pressure from the government. Fundamentally, the company is extremely strong and resilient, so the sell-off was completely unwarranted from a fundamental point of view, at least in my opinion. To prove that point, listen to this. Last year, Alibaba had their singles one-day event where they delivered $74 billion worth of value. So with power like that, it's not surprising that many Wall Street analysts are extremely bullish on this stock. The sell-off originally first started when Jack Ma, who is the former CEO and co-founder of the company, made a harsh comment towards the Chinese government's banking system, which caused the sell-off. However, Alibaba was not the only company that was impacted due to the sell-off, because other mega Chinese companies were also negatively impacted, some even more so than Alibaba. But if you are bullish, stocks like NIO, BYDDY, BIDU, JD, and TCEHY can all be a great way to diversify your portfolio in another region outside of the United States, while also getting very good deals for top-rated companies who are located in one of the largest markets in the entire world. The prices of some of these stocks are really good bargain deals, and I will personally be taking advantage of these opportunities because I anticipate a positive correction. However, I would warn you not to overexpose yourself to any one of these stocks due to the risks that are associated with them, and these risks are what we're about to talk about right now. The first risk is that these are foreign stocks that represent companies in a non-free market environment. Secondly, we do not know if Alibaba or the other stocks mentioned in this video have hit their bottom yet, so the stock price does have the chance to continue to fall even further. Lastly, even if the stocks bounce off of the support level, you need to have the stomach to hold onto these stocks for at least a year to get proper gains from them. So if you are not a fan of volatility, or you do not want to hold or own these stocks for over 12 months, you may find better opportunities elsewhere. Now, there is a lot more news to cover pertaining to this stock, but it's hard to fit this much information into an 8-minute video, so leave a like right now for more stock news updates, comment your thoughts down below, subscribe if you are new, and I will see all of you in the next YT video.